Good afternoon, everyone. We would like to welcome you all to the 28th session of Zentax Talks. We wanted to thank you all for the great and overwhelming response for our 27 sessions. Today, we are continuing with your questions, our answers on GST Departmental Audit, Inspection, Search and Seizure. Today, we have with us CA Arvind Tangam, who is here to provide great clarity on these topics and also provide practical insights on the same. So welcome, sir.
Yes, Pavitra. So welcome you all to this 28th session once again. It's extremely a pleasure to have you all back at our session of your answers, our questions. Your questions have been very interesting and Pavitra has been having a very excellent time reading through those questions. We will get started in another 2 to 3 minutes time and get the flow of questions along. Thank you for your patience. Thank you.
Thank you for your patience. Now we can go ahead with the session. I would like to welcome CA Arvind Tangam, who is here to provide a great clarity on GST Departmental Audit, Inspection, Search and Seizure. Welcome, sir.
Yes, Pavitra. So everyone, a very good evening. It is extremely a pleasure to connect with you once again through this Zentax Talks webinar. Your questions have been really very exciting and it is extremely a pleasure for us to answer your questions through this webinar. And your constant participation has been the excellent motivation for us to keep these sessions going. So thank each one of you for your participation in large numbers again and again in our session of Zentax Talks. So we will get started, Pavitra.
Yes.
Right, Pavitra? Yes.
So the first question for the day is from our Muthukumaran Ramakrishnan, sir. He's a great support for our Zentax Talk sessions. So we are starting the first question from him. So the question is, we have encountered an issue during the departmental audit for the financial year 2019-20. It has come to our attention that we failed to generate e-way bills for a certain purchases and sales, where the invoice value exceeds rupees 1 lakh. As a result, the department has issued a notice stating that these transactions are not valid. How to handle this issue?
Right. So this is a very practical question and it's an excellent real situation. So during the course of departmental audit, an audit is under the provisions of section 65. During the course of an audit, the departmental officers have noted that there has been certain purchases and certain sales transactions on which e-way bill has not been generated. They have proceeded to go on to say that the transaction is invalid. Sir, first of it, let's take it into two separate segments. One, there are some transactions of purchases which are deemed to be invalid. There are some transactions of sales which are deemed to be invalid since there is no e-way bill. So if my sale is deemed to be invalid, whether the department is ready to give back the amount of tax paid in my GST 1 and 3B as refund, since e-way bill was not generated, will the department accept that since e-way bill was not generated, it was not at all a supply made, therefore it is an invalid transaction? Are they really going to refund the amount of tax? No, I don't really see that situation. The real situation could be that they could levy penalty for non-generation of e-way bill. See, we have discussed in multiple sessions earlier also about the requirement of e-way bill for my outward supply. And with respect to outward supply or inward supply, the person who is effecting the movement of goods is the person who is responsible for generating the e-way bill. So with respect to this situation, that for my sale transaction, that is my outward supply, I had not generated an e-way bill, the department is proposing to levy penalty. First of all, whether penalty can be imposed under the provisions of section 129. See, during the movement of goods, if the goods are being intercepted and there is a documentation defect, then penalty will be under the provisions of section 129, which go on to say that penalty shall be equal to 200% of the tax amount if the owner of the goods come forward for the payment of penalty. If the owner of the goods does not come forward for the payment of penalty, then the penalty shall be equal to 100% of the value of the goods. This is the penalty applicable under section 129, and during the course of departmental audit, the department cannot really go to the provisions of section 129 for the levy of penalty. Section 129 penalty can be imposed only and only during the movement of goods. So the levy of penalty here for non-generation of e-waybill or an outward supply can at most be under the provisions of section 125, which is a general penalty clause. But how do we contest this issue? The real question from sir has been, from Muthukumaran sir has been, how to handle this issue. So for an outward supply, we need to really go on to check who is the person who has effected the movement of goods. Say, for example, it is a transaction where, yes, it is my sale, but the movement of goods was effected by my customer. The delivery terms as per the outward supply, that is as per the sale, was ex factory gate. My responsibility was only to deliver the goods at my factory gate. Then the movement of goods was effected by my customer. So the lapse or the defect or the non-compliance with respect to generation of e-waybill is entirely on account of my customer, and therefore there cannot be any obligation or any penalty on me. Could be the first and the strongest defense. Second defense, plead. That is, request the officer to say that non-generation of e-waybill is not for one transaction. You are going to, for every transaction, if they are going to impose a general penalty clause, it is going to be extremely very high. You can say, sir, I have not generated e-waybill for almost around 10 to 15 different transactions. For all transactions, put a general penalty may be accepted. Next comes the generation of e-waybill with respect to my inward supply with respect to purchases. Here you have mentioned that they have proposed to say that the purchase is invalid. Purchase being invalid would mean to say that they are denying the eligibility to claim input tax credit. Eligibility to claim input tax credit is contained under the provisions of section 16 of the GST Act, and the conditions based on which input tax credit can be claimed is contained in section 16(2), read with rule 36 of the GST rules. If you go very carefully through the provisions of the GST Act and the rules, there is no condition that e-waybill is a mandatory document for claim of input tax credit. Very well, the submissions to be made before the officer to say that e-waybill is not the basis for claim of input tax credit. My purchase is very clearly evidenced through the purchase invoice. Payment has been made to the supplier. Receipt of goods evidence through my stock register satisfactorily can be put forth before the officer to substantiate the benefit of input tax credit. The situation could also be that for the purchase effected by me, the department could levy penalty stating e-waybill was not generated. Here also, check on the facts on who is the person responsible for generation of the e-waybill, who is the person who actually effected the movement of goods. If the supplier had delivered the goods onto my premises directly, then I would not have generated the e-waybill at all. So in those situations, then substantiate that the movement of goods was effected by my supplier. Therefore, there was no requirement of generation of e-waybill by me. And levy of penalty can only be on that person who actually made the non-compliance, not on the recipient generally. Right? So hope this answers your question, sir.
So, all right, sir. Moving on to the next question. I have seen GST audit being conducted for many businesses. I'm a manufacturer of automobile parts. How will I know if GST audit will be conducted for my business as well?
Right. So many of my friends, many people in the business community really come back to this question. Sir, many of my other friends have got departmental audit. Will the department come as a surprise to me for an audit? No, definitely not. Audit cannot come as a surprise. Audit is under the provisions of section 65, and section 65 subsection 3 has a very, very specific provision that audit has to be issued only after, audit can be conducted only after the issuance of a notice. So there would be an issuance of notice in ADT 01, and only after 15 days, they can start the audit itself. So commencement of audit itself can only be after giving a prior notice of 15 days. So therefore, you would be intimated about it. You don't have to go to the department to ask them, sir, my neighbor, my next door person has got an audit. My very good friend, my brother has got an departmental audit. Will I get an audit or have I got an audit? No, don't worry at all. If it is going to be an audit, you would get a prior intimation. 15 days notice will be given. The notice will be given in form ADT 01.
So the next question is like a follow-up question. I have a textile manufacturing unit. One of my friends who also has a textile manufacturing unit had GST audit conducted by the department for his business. Is there any chances if GST audit will be conducted for by business, and what will be the parameters based on which they select?
Okay. So this is also a very similar question to say that someone else got an audit. Will I also get an audit? Or am I also getting an audit? There are some standard parameters based on which an audit, the case for an audit is being selected, like the size of the business. Say your turnover is above rupees 100 crores, your turnover is above rupees 500 crores. There are high chances that you are going to be subjected to audit. There is a very wide variation in turnover. Say, for example, your turnover last year was 50 crores, you will suddenly increase to 200 crores. Or you are like 200 crores, your turnover suddenly came to 50 crores. In both situations, there is a substantial change in turnover. There is always a suspicion or doubt for the department. That could be one of the reasons for taking up your case for audit. There is huge amount of ITC reflected in your 2B. What you claimed in 3B is very, very low. Or there is very less amount of ITC in your 2B. The amount of ITC that you claimed in your 3B is very, very high. Could be a reason. You are not filing your returns on time or periodically. Could be a very good reason. Huge amounts of refund claimed could also be a reason. Right? So there is some financial ratio analysis which the department does based on data analytics. Department is also using high-end data analytics, either directly through their software or they are giving it to high-end institutions like IIT institutions. So IIT institutions based on data analytics may select these cases to say, based on the ratio analysis, these are the cases that are subjected. These are the cases that are prone for revenue evasion, and therefore it is better to take up the cases for audit. Based on some other information, that is industry-based information or from other governmental authorities, also the case can be taken up for audit. So these are some of the situations based on turnover, based on wide variations in turnover, based on ratio analysis, when you are not filing your ITC, when you are not filing your returns properly, when your ITC is huge and disproportionate to the size of your business. These are some of the reasons when the case can be taken up for audit.
So moving on to the next question. In audit proceedings, can they ask for 5 years accounts and other documents? That is like from financial year 18-19 to 22-23.
Okay. So for some good reason, the person who asked the question has left off 2017-18. The question talks about 2018-19 to 2022-23. Right? Okay. So question is, can the audit be done for multiple years together? So can it be done for only 1 year or can it be done for multiple years together? So here again, we refer to the provisions of section 65. Section 65 very clearly goes to say that the audit can be for multiple years together. The audit can be for multiple years together. And you refer to the provisions of rule number 101. Rule 101 very specifically goes to say the audit can be for multiple years or even for part of a year. So rule 101, sub rule 1 very clearly goes to say the period of audit to be conducted under section 65(1) shall be a financial year or part thereof or multiples thereof. Since they use the word multiples thereof, even the audit can be conducted for 5 years together during one audit assignment itself.
Okay, sir. So moving on to the next question. I'm a manufacturer of agro-food products. I have factory, warehouse and corporate office. Where inspection under GST will be conducted? Are there any specified places?
Right. So a person having multiple locations and all these places are assumed to be added as an additional place of business in their GST registration. In which situation, how should the audit be conducted? Whether at all, first of the question, I would modify the question a little bit to say, whether at all the audit will be conducted at my premises or the audit can be conducted at the department's premises itself. That is whether it is going to be mandatory that the audit will be conducted at our premises or they can even do the audit at their premises. Audit can be done at the premises of the client or even wherever the department officer is situated, right? So where would they generally do the audit? They would do the audit at the place where the books of account are maintained and the returns and statements furnished, whatever it is, they should be in a position to verify the books of accounts maintained by the firm or the proprietorship concern or the company as the case may be. If any books of accounts, including the stock register or copies of delivery challans or copy of invoices, warehouse receipts are maintained. So in which situation here in this question, I think they have a factory, warehouse and corporate office. The audit can be conducted at the factory, the warehouse and the corporate office also. Therefore, it is not only that the audit will be conducted at the corporate office, audit can be conducted at all the units of the registered taxpayer.
So moving on to the next question. We recently had GST audit from the department for our business. What should we do next? Should we wait for some more information or any intimation from the department?
Right. So audit is now completed. After the audit got completed, what should we await for? Sir, if everything is pakka okay, then there would not have been any audit para at all. But in any situation, generally, during the course of audit, the department would have come out with what is called as an audit para. And the audit para will talk about the non-compliances or any differences noted by the departmental authorities during the course of audit. So in response to the audit para, we are required to submit our explanation. So if the explanation is found satisfactory, then the audit comes to an end. Right? So the audit report would be issued in form ADT02 and they would say that these are the audit paras given. The reply is given by the taxpayer in such manner. The reply found submitted by the taxpayer is found reasonable, acceptable, and therefore the proceedings or there shall not be any further proceedings in this regard. If such an order is issued, then the proceedings come to an end. In all other situation, if the audit para is issued, you have given a reply, it is best that you await the issuance of notice in form DRC 01A, which is issued under the provisions of Rule 142(1)A. Then that would be followed by the issuance of show cause notice and all the proceedings under section 73 and 74 will continue. So 65 is about audit, but all other proceedings would be under section 73 and 74, which would be under the normal proceedings of any other statutes, any other issues.
So moving on to the next question. This question is from Mr. Mahendra S. GST department issued notice on fake invoices of purchase made, but we have actually purchased the goods and made payment. We have purchase invoices, lorry receipt bill, e-way bill, and payment from the bank. So how do we prove we have actually received the goods to the GST department?
Okay. So this is a case of fake invoice alleged by the department, but the question posed has been very, very clear that we have received the goods. So what evidence does the department have to say that it is a fake invoice? Just because the supplier has issued any number of some, say for example, 10, 20, 30% of fake invoices does not mean all the invoices issued by my supplier are fake. It has to be a very clear communication to say, sir, you have given me a communication to say that this supplier has got involved in issuance of fake invoices. But there has not been any evidence produced to say that the goods purchased by me has not been actually received. That is, I have only received invoices, but not the goods. There has not been any factual evidence brought out by the officer. At the very first level, when the officer is alleging an issue on the taxpayer, then the officer has to provide a reasonable set of evidence to say that you have received only the invoice and not the purchases at all. But the department may refer to section 155 of the CGST Act, which talks about burden of proof, where any person claims that he is eligible for input tax credit, the burden of proving such claim shall lie on such person. So when I have taken input tax credit, it is my responsibility to prove that I am duly eligible for the input tax credit. So duly eligible for input tax credit satisfy the conditions under section 16(2). Section 16(2) very specifically goes to say that I have received the goods or services. So whenever I have received the goods or services, you get to show your stock register to say that I have made an entry in my stock register on that respective date that I have received the goods. If there is any system of making a gate seal, if there is any system of recording or entering what is called as a goods received note, GRN, these are some additional documents which you would be able to substantiate that you have actually received the goods. Or any declaration from the transporter to state that I have actually transported the goods through this vehicle from such and such person to such and such person for the invoice covered under this number. That could also be an additional evidence for the department. So there is no one single set of documents which I should really submit to the officer, but take any extra effort to submit all additional set of documents which would really help you to substantiate your case.
Thank you, sir. So the next question will be, I have been informed that GST Departmental Audit will be conducted for my business. What is the maximum period for the conduct of the audit in my place of business?
Right. So I think the question relates to the number of days the departmental officer will generally conduct the audit. So the number of days the departmental officer will conduct the audit is based on the size of the company. I think the previous question also I answered to say whether my case would be subjected to audit. Yes, it is based on the turnover, based on the value of outward supplies of such company. Here as well, I will go to say it is depending on the size of the company. So if your company is really small, the time taken for audit may be, say for example, 1 day, 2 days at the premises, and then 2-3 days of desk work is something that they generally do. But how long would the audit go for? When would the audit para be issued? If those questions are really there, the audit is expected to get completed within 3 months from the date of commencement of audit. Audit has to get completed within 3 months. And 3 months is a catch. 3 months is from the date of commencement of audit. And what is commencement of audit is very clearly defined in section 65, subsection 4. Or in rule 101, if I'm not wrong, in rule 101. In rule 101, there is a very specific definition to say. No, it's defined in section 65 itself. Section 65 itself defines the term commencement of audit. So commencement of audit goes to say the date on which all the documents called for by the tax authorities has been submitted by the registered tax person. So whenever it is subjected to audit, they will say some 20 checkpoints to say you need to give me all these 20 checkpoints. If you have given all these 20 checkpoints, so that is the date of commencement of audit. Generally, you might have missed on 1 or 2 things. So generally, there is no time limit of date of commencement of audit. When there is no date of commencement of audit, then there is no time limit of 3 months also. So that could be a very practical scenario also.
Okay. Moving on to the next question. A business premises inspection conducted under section 67(1) of CGST Act 2017. During inspection, 1 undeclared godown, we have not maintained stock register. 3 officer taken physical stock and not issued any seizure of goods in INS 02 or order of prohibition in INS 03. In this case, what are the penalties attracted under CGST Act 2017?
Okay. So thank you, Manjunath, for this question. So inspection has been conducted under section 67, subsection 1. So inspection under section 67, subsection 1 is conducted based on the authorization by the Joint Commissioner. And if you really read through the wordings of section 67 subsection 1, Joint Commissioner can authorize any other officer for the conduct of audit. The Joint Commissioner himself or herself cannot actually conduct the audit. That is one of the very basic aspects relating to section 67 subsection 1. When it comes to section 67 subsection 2, let's see if there are any questions relating to search. Search is something very different, but inspection is something very different. The Joint Commissioner can authorize, but Joint Commissioner shall authorize only any other officer. The Joint Commissioner cannot authorize himself or herself for the conduct of inspection. So in this regard, when there is an undeclared godown, right? So when there is an undeclared godown, the penalty can be under section 122. So section 122 talks about various situations when there can be levy of penalty. And there it goes to say a penalty equivalent to 10,000 rupees or equivalent to the amount of tax evaded. Here, there is no evasion of tax. Evasion of tax goes to say, I have made an outward supply and tax has not been paid. I claimed input tax credit, but I was not eligible to claim input tax credit. These are two, or I claimed erroneous refund. These are some situations where the department can allege tax evasion. But here, when it is a situation of undeclared godown, then penalty shall be under section 122, which shall be at rupees 10,000. Or if they are not really preferring to go for section 122, they will go with section 125, which is the general penalty, which will levy penalty up to rupees 50,000, 25,000 plus 25,000. Under section 122, it will be 10,000 under CGST, 10,000 under SGST, which will be equal to rupees 20,000. We have not maintained stock register. Yes, of course, and not maintaining stock register is also one of the contravention of one of the provisions of the law. So contravention of provisions of the law can attract general penalty, right? So that is also can also be under section 122. So if we go to section 122 subsection 1, you have a clause 16 of section 122(1), which goes on to say fails to keep, maintain or retain books of accounts and other documents in accordance with the provisions of this act or the rules made thereunder. So a person who fails to keep and retain the books of accounts and other documents. So what are the documents that are required to be maintained? We had a very excellent session earlier. I think the session is also available on YouTube now. The excellent session with respect to documentation and records. So with respect to documentation and records, the discussion very clearly dealt with what are the documents that you need to maintain. Stock register is one of the documents that you need to maintain, and when you have not maintained the stock register, then you are applicable penalty is under section 122(1) clause 16, wherein the penalty shall be at the rate of rupees 10,000 under CGST and 10,000 under SGST. Where the officer has taken physical stock and not issued any seizure. Sir, the case has been only with respect to inspection under section 67(1). If it has to be a seizure, then it has to be a search under section 67(2). Only then there can be a seizure at all. This is merely an inspection. Therefore, there has not been any seizure of goods INS 02 or any prohibition under by the order or any prohibition order for sale under INS 03. So, in which situation, if there is a difference between the physical stock and the book stock, then there could be a notice under section 73 for tax evasion. That is, you have sold the goods without issuance of invoices. That could be a situation, and therefore there could be a levy of tax and related penalties under section 73 and 74. Other related penalties will not generally follow once the penalties under section 73 and 74 are getting initiated. Even if it is getting initiated, since the penalty, you can always plead that since the penalty has been issued under section 73 and 74, all other penalties under section between sections 122 and 138, that is the offences and penalties section, shall not be applicable. Could be a plea placed before the authorities. We hope, Manjunath, we have answered your query.
All right, sir. So the next question is an interesting question. I'm a registered GST practitioner. I recently came across that search and seizure can be initiated even for cancelled person. Is it valid?
Yeah. So very rare situation, but someone has come across this very practically. So someone has cancelled their GST registration. Can a notice or what was it? Can a search, inspection, seizure under the provisions of section 67 or even an audit under section 65 be conducted for a cancelled dealer, right? If my answer is no, then every registered taxpayer today would go on to cancel their GST registration and such that so that they would not be subjected to any future audit, inspection, search or seizure at all. But in general situation, there can be an audit even with respect to cancel dealer. There can be an audit even with respect to cancel dealer. But there could be some practical difficulties for the conduct of audit. But whereas with respect to inspection, even there might not be any premises for the conduct of inspection at all. So generally, the department will do some amount of groundwork before they come for an inspection search. So generally, it should not practically happen, but there can be a situation where an inspection or search or an audit is initiated even for a cancelled registered taxpayer.
So the next question will be applicability of GST sales of fixed assets, supply of old used machinery from our mill.
Let's assume that it's a spinning mill or any mill for that matter, even if it's a sugar mill for that matter. Sale of fixed assets is applicable for GST. No second thoughts about it. Sale of fixed assets is subjected to GST. Sale of old used machinery is subjected to GST. There is no exception from the scope of supply or from the charging section or any exemption provided under any notification for the sale of fixed assets or sale of old used machinery from the mill.
So the next question will be, we have paid taxes before DRC 01. Only interest due in our case. Penalty is applicable or not?
Okay. So, sir, the assessment of tax, or to say the determination of tax not paid or short paid, will be under section 73 or section 74. Both section 73 and 74 have provisions where you can make the payment of tax before the issuance of SCN. I think the very specific question is, before the issuance of SCN, I have made the payment of tax. So should there be a levy of penalty? If the proceedings are under section 73, proceedings under section 73 are very, very clear that if the amount is paid in full, along with interest, before the issuance of show cause notice, then there shall not be any issuance of show cause notice at all. This is contained under section 73, subsection 5 of the GST Act, which goes to say the person chargeable with tax may, before the issuance of sub notice under subsection 1, that is under 73 subsection 1, where there is no situation of fraud, willful misstatement, or suppression of fact, he shall make the payment of tax along with interest payable thereon under section 50 on the basis of own ascertainment or as this ascertained by the tax officer, and inform the proper officer in writing of such payment. Only on complaints of this, then 73 subsection 6 goes on to say, then the officer shall not serve any notice under section 73(1). So, where you have paid only the tax, interest is not paid, then the department can proceed to issuance of notice under section 73(1). When notice is issued under section 73(1), then naturally the related penalty under section 73 would also flow, and the penalty would be at equal to 10% of the tax amount. If the proceedings are under section 74, then the provision is a little different, which goes to say that where the amount is paid even before the issuance of notice, and you don't want the notice at all, even then you need to make the payment of tax equal with interest and 15% of penalty. So any proceedings under section 74, you need to make the payment of tax, interest, and at least 15% of penalty, so as to avoid the issuance of show cause notice. Hope Manjunath sir, this question is also very specifically answered.
So the next question will be, I'm a manufacturer of automobile parts. While transporting, my goods have been seized by department. What is the procedure to get back the goods? Should I pay any penalty?
Right. Okay. So, though this is not a very specific question relating to inspection audit, but this is a question relating to roving squad, e-waybill. So there is some issue. And because of which during the movement of goods, it was during the movement, because it very specifically says while transporting. So during the movement of goods, there was an issue, and the goods were seized. Right. So whenever there has been any contravention, yes, of course, there could be levy of penalty. Seizure is something which is at the very last resort. So on levy of penalty, after interception of the vehicle, the taxpayer will be required to make the payment of 200% penalty. Or payment of 200% penalty, the goods would be released. Or if the person does not come forward, the department can propose penalty under section 129 1B, which goes on to levy penalty at equal to 100% of the value of the goods. So 100% of the value of the goods, then entirely you need to make the payment and then only get the goods released. Or 200% of the penalty. 200% of the tax payable will be leviable as penalty.
Moving on to the next question. During search conducted in our business premises, the authorities took away the cash, thinking it belongs to us as sale suppressed by us. Is it valid under GST? Can we take back the cash? Can we get back the cash taken away from us?
Right. So, department has the powers of search under section 67 subsection 2. During the course of search, they are allowed to seize. But seizure can be only with respect to goods. Is cash goods has been a dispute which has arose at multiple situations and very well settled. Cash is not goods under the provisions of the GST law. Cash is not goods. Seizure can only be with respect to goods. And since cash is not goods, cash cannot be seized. Even though there could be suppression of turnover, there could be suppression of sales, cash cannot be seized under the provisions of the GST law. Very clear. There are the very supporting judgments of the various high courts also in this regard. So cash can never be seized under the provisions of the GST law.
All right, sir. So the next question will be, we have been asked to pay tax on the difference between physical stock and stock as per books of accounts during the audit conducted by tax authorities. Is there any relief provided to us, or should we pay the amount as tax?
Okay. So they asked you to pay the difference between physical stock and book stock. First, identify whether the physical stock taken by them is correct or not. If the physical stock taken by the department is correct, then you, for your own satisfaction, prepare the factual submissions on why there was a difference. There could be various situations where there could be during the day when there was movement of goods, the physical stock was taken, or there could be a situation where cut-off procedures were not properly adopted at the time of physical inventory taking. For cut-off procedures to mean goods in transit, or say, for example, there could be ongoing purchase and sales, goods are being added, goods are being taken out. So those are some factual aspects which you need to very clearly check for the arriving of the physical stock. If there is a difference, after also ascertaining all these issues, then it is better to pay. But if you are able to convince the department with reasonable submissions, your own reconciliation, then tax liability will not be liable to be paid.
Okay, got it. So moving on to the next question. Search under section 132 was conducted by the Income Tax Department and found there was excess stock available in the premises. The assessee has admitted the same as income under the Income Tax Act and paid the relevant tax under the law. Now, the GST department says that since the goods were not accounted for in the books of accounts, the same is liable for confiscation under GST Act. Is it valid?
Right. So first of it, something was done by the Income Tax Department. How did the GST department even come to know about it? So very clearly, there has been an MOU signed between the CBDT, that is the Central Board of Direct Taxes, and the Central Board of Indirect Taxes and Customs, which is CBIC, which is the governing authority for GST, for cooperation and synergy between the various departments. That is, so constitutionally, both the department can share the information about the assessee. Thus, as a result of search conducted by the Income Tax Department, there could be repercussions under the GST also. So therefore, a search by one department can pay for investigation, inspection, audit, or search by the other department also. Right? Your question has been also to say whether confiscation can be arised. Right? So confiscation is something which is consequent to inspection, search by the department. So only based on search, only based on authorization, search, seizure or confiscation can happen. But basically at the very top level, confiscation will not be the first resort in this situation.
So the next question will be from Mr. Vinod. Whether appeal can be submitted after condemnation delay of 1 month.
So hi Vinod, messaging from the name of Jinu. Hi Vinod, good to see you here. So appeal cannot be submitted after the condemnation period of 1 month. The statutory time period is very, very fixed. The authority does not have the power to condone the delay beyond the period of 1 month. See, the statutory time limit for filing of appeal is 3 months. Very clearly provides an additional time period of 1 month for filing of appeal. If the assessee has missed the statutory time limit of 1 month also for the filing of appeal, the department can proceed for recovery. Therefore, what we need to do is we need to only approach the doors of the High Court, who can remand back the case and ask the authority to reconsider the case based on merits. So if it's a good case on merits, maybe we can have to try and approach the High Court. But otherwise, there is no power for the appellate authority, the first appellate authority. See, under the provisions of GST, we have two appellate authorities. One which is the first appellate authority, for whom the appeal will be provided for under the provisions of section 107, or the second appellate authority, which is the GST appellate tribunal, which is still under formation. So for any authority, the time limit for filing of appeal is very clearly provided under section 107. Say, for example, for the first appellate authority, 3 months provided under section 107(1). 107(4) provides an extension of 1 month, and beyond that, condemnation cannot be provided by such authority because it is restricted for under the Act itself.
All right, sir. So moving on to the next question. Can anyone else other than the GST authorities conduct an audit? If so, when it can be conducted?
Okay. So generally, audit can only be done by the GST Departmental Authority. But in very rare situations, the department can appoint someone as a special auditor. That is, special auditor is also provided for under the GST law. You have a specific section under the GST law which provides for special audit. That is where the audit is cannot be conducted for reasons of complexity by the departmental authorities. Then they can order for a special audit. So the special audit can be conducted either by a chartered accountant or a cost accountant. The commissioner, based on the empaneled team, can authorize these people as to conduct special audit. And the special audit generally has to be completed within 90 days, and the findings have to be communicated to the GST department only. So based on ADT 04, you will communicate the findings of the audit to the department, right? So that is a special audit.
So the next question will be, I'm a GST consultant. GST officials conducted search at one of my client's place of business. The grounds of search stated reasons to believe. Is it valid, or do they need actual information of proof for suppression of transaction to conduct the search? Also enlighten on the authorities who can conduct search.
Okay, so there was a search conducted at the premises. So the question is, who can conduct the audit and whether they should provide the reasons for conducting the search, right? So section 67 subsection 2 very clearly says where the proper officer, not below the rank of the joint commissioner, either pursuant to an inspection carried out under section 67 subsection 1 or otherwise. So inspection is mandatory for search, no. But go on to reading to say, has reasons to believe. Reasons to believe, very specifically, there has to be very specific reasons that any goods liable to confiscation or any other document or book or things which in his opinion shall be useful for or relevant to any proceedings under the Act are secreted, then only in which situation he may himself search and seize the goods. Right? Sorry. So the answer is very, very clear that the authorization can be by any officer who is not below the rank of the Joint Commissioner, and very specifically, the reasons to believe needs to be very much there for an inspection or search. But reasons to believe, whether it has to be produced to the taxpayer at the preliminary level, no. But when the taxpayer questions the reasons to believe, then it has to be produced by the department.
All right, sir. So the next question will be, I'm a manufacturer of sweets. My goods are seized by the department, and I wanted to release them because they are perishable in nature. What is the remedy available?
Right. So if my goods are perishable, then immediately you can ask for release of the goods. Right. So whenever the goods are of perishable nature or of hazardous nature, then you can request for payment of the market value of the seized goods. So they have seized the goods, it is perishable. You make the market value of the seized goods, then you can immediately get the goods released and contest the levy of penalty. So the goods shall be released by showing the payment of proof, and the department will issue the order in GST INS 05. On the issuance of INS 05, you can get the goods released.
Okay, sir. So moving on to the next question. How can we check the difference of outward taxable supplies in GSTR 3B returns when compared to turnover reported by the TDS or TCS authority in GSTR 7 or 8?
Right. So when is this GSTR 7 or GSTR 8 getting into the picture? Say for example, someone is deducting TDS. Say for example, supplies made to the government, TDS is deducted. Say for example, there is a painting contractor to the State Bank of India. State Bank of India will deduct TDS under the provisions of GST. In which situation, you have to say that my outward supplies to a State Bank of India is of this value. TDS reported in my GSTR 7 is of this value, therefore this is the matching. Or say for example, it is a supply through an e-commerce operator. Then also you can reconcile to say these are my outward supplies total, and out of which these are the supplies made through my e-commerce operator. So therefore, this is the reconciliation. So you can reconcile the difference. You have the details of your GSTR 3B. The breakup of entries reflected in your GSTR 7 or 8 can be viewed by going into the return, and therefore you could do a reconciliation for it. If you have any difficulty, do get in touch with the team, and we will definitely support you in this aspect.
All right, sir. So moving on to the next question. Can the audit officer allege suppression of any turnover during their check of accounts?
Right. Okay. So can there be can an audit, is an audit like an inspection? See, suppression of turnover happens only during inspection search. Can the departmental officer allege something was suppressed during the time of audit? Yes, of course. Audit, they come to say you have not paid tax on the rental income received, which is shown as an indirect income. So rental income, you have not paid GST, then of course they can definitely take up that question to say you have not shown this voluntarily, this is amounting to suppression. Yes, this is very much possible.
Okay, sir. So this is like a very basic question. So it was asked that what's the difference between inspection and search and seizure?
Two types of answers. One, which is a legal answer. All three are same. All three are covered under the provisions of section 67. So if you ask me, what is inspection, search or seizure, everything is contained in section 67. If you ask me very specifically, what is the difference between inspection, search and seizure, then I would say on a very legal note, section 67(1) talks about inspection. Section 67(2) talks about search and also gives the power to seize the goods in the course of section 67(2) itself. Seizure cannot be during inspection. Seizure can be during search. To answer in a very plain language, what is the difference between inspection, search and seizure? Inspection is where they can come only to your official places, that is to your place of business. Search is something wherein they can come even to the residence. Seizure is something wherein they can take away the goods, documents, or books or things. Anything can be taken, but not cash. Here again, let me again clarify that cash does not fall under any of these items, that is goods, documents, books, or things. Only these four things can be subjected to seizure. Search is something wherein they can come even to the residence, but with respect to inspection, which is only to their confined to their place of business.
All right, sir. So we are done with the questions. So if the audience have any more queries or clarifications, so you can use the Q&A chat box.
Can the users unmute themselves to ask some questions? You can raise your hand so that we will unmute you. Can we unmute them in bulk? Can we? So it's been an excellent interaction. It's been we feel extremely thrilled to interact with you through these sessions, right? Can two notice be given for the same issue, like difference between 2A and 3B for the same financial year? No, sir. For the same issue, for the same financial year, no two notices can be issued. Definitely, you can proceed on one separate notice and then say, for this issue, notice has already been covered. Therefore, the subsequent issue cannot be proceeded for. Right? Definitely, it cannot be issued. Yes, Meenakshi. So, hope this answer is also very clear. For the same issue, two notices cannot be issued. There is one final question. Same issue in audit and scrutiny, what should be done? Can it be raised in such a way? Audit is separate, scrutiny of returns is separate, definitely two different proceedings, but same issue cannot be proceeded yet again. You can raise it to say, but that same issue cannot be alleged again and again. You can definitely submit it before the authorities. That same issue has been covered. If there was no notice at all, then you cannot say this was looked into. Whenever there has been an audit para or whenever there has been a notice, you can very clearly submit to say that there has been this issue has already been covered by a different authority, even by your junior authority or by your senior authority, then the same issue cannot be taken up once again. Govindra, sir, small question shall I ask? No, definitely, please. Admin, can you please unmute them? Can we allow everyone to talk? Yes, Govindra, sir, you can unmute yourself. Any possibility to unmute everyone? I think you can unmute yourself, Govindra, sir, and then speak. Or those who want to really ask your questions on voice can also raise your hand so that we will immediately unmute you. So others as well. Govindra, sir, you can also type your question. But anyway, since we await this, sir, you can just revert with your emotions to say, how do you like these format of questions and answers? If you really want us to continue in this format of question and answers, or do you want us to continue in a very traditional webinar mode? If you have any suggestions, your suggestions and your value-added feedback is what really motivates us to take things forward. You can immediately vote in the poll. You can immediately vote in the poll that is being given to you. That will give us an idea on how to really go forward with the future sessions. Whether you want it in this format of your questions or answers, or you want it in a manner in which we are going to explain the provisions as such. Is the poll ready? Thank you for your encouraging feedback of claps. So upcoming sessions, yes, of course, start the poll. There has been a spelling mistake, fine. Upcoming sessions, fine. Upcoming sessions, you want it in Q&A format or in sessions format, right? So you can give your votes so that it will help us to structure our sessions in your interest. And I think we have Q&A formats beating now the sessions voting. 13 people have voted already very quickly. So we have large numbers of audience over here. We encourage every user to vote for this now very quickly. Votes are getting very quickly now. I think it's almost evenly paced now 50-50. So And the users, I don't think would be able to see the voting results until we publish the result now. But so far, it's like say 47% have said Q&A sessions are good. 52 people have said sessions are over. So 50-50, now it's like 50-50. Now I think it's going to be almost the same. I think it's very evenly divided. So we should have 1 week of Q&A sessions, and I think we should have 1 week of direct session also. These sessions would definitely be interesting in this format. We are also coming out with more and more different ideas on keeping the sessions engaging. We request you all to really share the upcoming sessions with your friends, colleagues, and friends in the industry, the profession, so that more and more people can get benefited out of these Zen tax talk sessions, right?
Yes, sir. So we want to thank you all for attending this session. So we can meet in the upcoming weeks. So thank you.
Thank you, one and all. We will publish the result immediately now for everyone to view that, right? So the results are like say 48% said that Q&A are good, 52 people said sessions are good. So it's almost evenly poised, and then we will do it this way, right? Thank you, everyone. Thank you.